Okay, so let's put this to Devang Mehta of Centrum Wealth Management, who joins in now. Hi, Devang. Morning. A lot of people at one point were thinking of IT as a contra trade recently. What is your take on IT? Rima has spoken about the cross-currency headwinds that are there now, that being one piece of the puzzle. What else would you be looking for? Is it an investment opportunity?
Good morning, Sumera. Thanks for having me on the show. This was a wonderful analysis which Rima had done, and I was just glued to the screens. So most of the points I do agree with that generally the people or the investor community feel that INR depreciation or rather the dollar index rising, a lot of this IT companies who derive their revenues from US would tend to benefit. But there are two things which emerge. So of course, Rima talked about cross-currency headwinds which emerge out of the GBP as well as the pound, the GBP as well as the euro. How that sort of has also depreciated against the dollar, and how that would affect sort of the revenues that you get, a little bit of more revenues that you get from US is neutralized by what is happening across Europe. So of course, it's very important to look at the construct mix of how these companies derive their revenues. The second most important part is the IT companies were facing was on the lateral hiring, was on the sort of how they had the bench strength, as well as how the margins would also get compromised when the demand scenario across US and Europe seems to be weak. And when we talk about a sort of slowdown and recession appearing in a lot of European countries, if not US, I think the demand would also sort of get a little bit curtailed. Though, as I said, most of these companies have corrected big time. The valuation adjustment for right from Infosys to TCS to even a Wipro and HCL Tech have happened, and also the mid-cap IT companies have corrected. So my sense is most of the bad news seem to be in the price at this point. Most of the currencies that would have created havoc, there would be a stop somewhere down the line in another 1 or 2 weeks. And I think the quarterly numbers just 10-15 days away with most of the IT companies. I think it's a good opportunity to sort of pick up this companies in tranches.
Devang, morning. The next talking point is going to be the festive demand. What is it that you've picked up in terms of the intensity of the demand? Urban was strong up until now. Rural was a bit muted. Has rural picked up ahead of this festive season? And if yes, what is the best way to play it in terms of individual stocks? And would it be a tactical play or would it be an investment call also?
Morning, Rima. I think clearly what we need is in this type of markets is something where there is quality as well as quantity of earnings which will come. Most importantly, as you rightly talked about the demand scenario, the urban consumption was sort of never questioned after we came out of COVID lockdown. And what we are seeing across India, in fact, also in the hinterland or the rural parts of India, I was traveling to a lot of parts in this last 4-5 weeks, doing a lot of meetings. What I found is one, the consumer confidence, the client confidence regarding how Indian economy is shaping up has just sort of turned a corner in the way that everybody is sort of getting positive, and such falls will encourage people to get more and more positive. But coming back to the question about demand, I've seen a lot of tourism happening with a lot of vengeance, revenge tourism, revenge travel, revenge shopping, revenge eating out. This was more a theory which was happening in urban India, but post good monsoon, I think generally the rural India also seems to be coming back with the fore. You hear to a lot of commentaries in the first quarter about companies who are based on the discretionary consumption. All these companies were also talking big time about how consumption is coming back, be it non-discretionary, be it discretionary, be it home improvement, building materials. The tier 3 and the tier 4 cities are also experiencing a good boom in terms of real estate sales as well as home improvement as well. So my sense is yes, demand is going to stay. Yes, if the terminal rate now, when we talk about RBI, is going to be at around 6.5, it needs to be seen that on a higher interest rate, how a certain discretionary consumption would get probably delayed or whether it gets cancelled. So that is one part which we'll closely observe over the next 2-3 days. But my sense is demand right now seems to be good. People have come out of lockdowns, and I think this revenge tourism and revenge eating out and stuff and discretionary consumption would sort of continue for at least a quarter or two.
Devang, I agree with you because, even I was reading a report which said that the higher ticket consumption is continuing. But there are some question marks on the lower ticket items, the spending appetite or the consumption appetite of, the lower income earners hasn't returned to the same level as it was, say, pre-pandemic. So, given that, what would be the kind of stocks you would look at? I mean, considering that, these lower ticket items are not moving as fast as one would have hoped.
In fact, Sumaira, you hit the nail on the head, and in fact, that is what we were talking about, discretionary consumption. And discretionary consumption generally comes in terms of the higher strata of the pyramid, where a lot of people right now have more disposable income, or people would have saved a lot of money in the pandemic. Of course, it will sound cliche, but a lot of people who sort of delayed inevitably their travel or their shopping are now shopping with a bit of vengeance. And that is why companies in the auto universe, right, Maruti, Eicher, just giving certain examples, all these companies had suffered in the last 4-5 years on the back of a lot of more headwinds as well as COVID setting in. I think most of the people right now are getting into buy not only a vehicle but even a premium vehicle. You said rightly that higher ticket consumption is sort of the order of the day, which is seeing good green shoots. And that is when I talk to a lot of builders or the real estate community, you find there is more demand for a 4 BHK than even a 2 or a 3 BHK in tier 1 cities. So yes, the discretionary consumption stocks like Titan or even the auto universe or something which is in the luxury segment, all these companies would tend to do well. You look at the sales of the electronic goods or the white goods or the consumer goods which are happening across has just the festive season which has just started. So my sense is that discretionary consumption should be one theme which one should start looking at very seriously in the portfolios.
Okay, and finally, Devang, could you help us with some stock recommendations, the ones which look most attractive at the current juncture?
So this wouldn't be counted as recommendations, but some of the portfolios that we built, the construct of the portfolios has been over the last 4-5 years, the tilt has been towards more of home improvement as a theme. Some companies like Asian Paints, some companies like even Acera Ceramics, something like an Astral Poly in the mid-cap universe. These are some of the cracks. These also fall part of the consumption universe, companies like Eicher, something in the agrochemical as well as specialty chemical universe. All this form part of the portfolio. And of course, we can't forget something in the BFSI. Bank Nifty has corrected by 8%. Why not get into companies like ICICI or a Kotak Bank or something like a Bajaj Finserv, where you get a proxy for NBFC holding in Bajaj Finance, and also the indirect holding into the Bajaj Finserv, the Bajaj insurance companies, both general as well as life insurance. So I think this is a theme. If you buy the certain sectors in the portfolio, probably the portfolio would do very well for the next 3-5 years.
All right, Devang, thanks very much for dropping by and for speaking to us. We're going to take a very quick break, but we'll catch up on what's happening on the market on the other side. Stay tuned.